Wow, we are blessed with a legend, Mr. SPX. Thanks, man. You too. Welcome, all three of you. How's everybody doing? Hope it was a great weekend for all of you. Nice, just some bird calls. Continuing to educate yourself. Love it. Yeah, yeah, Ramsey, you're hopping on that train. Yeah, we'll see how many people we get tonight. Group sure was silent this weekend. Oh man, I forgot. Is it football season? Yeah, I forgot. This is actually like a situation every year. So you're telling me Lambos ain't showing up? I do remember this every year though, that football season tends to be slow. March Madness time can be a little slow too. Welcome, welcome everyone. How we doing? We'll give it a few more minutes. Dude, they clobbered it. What's up with that? It's ugly. Yeah, they clobbered it. Tech looking bad. Not ready to be long tech just yet. And they just sliced the weekly 20. Welcome, welcome everybody. Hope we're all doing good. Hope we had a good weekend. We'll just give it a couple more minutes. Starting with SpyQQQ, then Apple, Amazon, Meta. I know people like to trade Meta. It's not my favorite to trade, but it's kind of like it's at a point where it could make it, as if it hasn't made big moves already. It could keep making a move in either direction coming up here, so I like that. And then AT&T still just on the rip of a lifetime, and Coca-Cola. And then we should have plenty of time, and uh so I love looking at the other people's charts, man. I've hit a couple good trades from people in here. So I like that. I use the hourly 20 EMA. An hourly 20 SMA is a great tool also. I just love that hourly 20 EMA. It just works so good. And it can really just help with your like if you have a bias on the day and then all of a sudden something starts happening around that hourly 20, then you can like really quickly make that decision to get on the other side of it. That was even it was a handy little thing on Friday because a lot of people, they saw the jobs report and it was, I mean, I won't say it was horrible, but it wasn't great. They saw the jobs report, so it's easy to try to, scalp a little bit long there early in the day. But the second, and then I should put on VWAP also, but the second you crack that hourly 20, you crack VWAP, you should really start looking short. So it's just, it does a really good job at telling you where that market sentiment is changing from, maybe the day before or whatever. Welcome, welcome. Where would I take SPY puts and why last Friday? I can show. So, yeah, I can show you where I took puts last Friday. So one of the first ones were somewhere right around here. Let's here we go. Here's my chart. This is now let me get my indicators on. 1 second. So my daily levels that I always have, obviously gap top, gap low. I labeled those so I'd know what they were and why they were on there because, I mostly trade my big daily levels, but you have to take note of that. So that's what we saw was we had worked, back up through this gap and took a nice little pop. So took some calls here. And then my first entry was short, was somewhere right around here. One of these few candles right here. I knew that this was my entry. I knew that this was my entry short here if we were to break and kind of hold below it. So I saw these wicks and it worried me, but I knew that my stop was going to be up here above this hourly 20. I was risking like 70 cents, really looking for the gap low. This might even, if I recall, this was low a day or something like the day before. Yep, there we go. So that was low a day the day before. So break of that, break of the hourly 20, break all the EMAs. That's when I start to feel better about it. So I got in short there. I think I was out at the bottom of this candle. And then the next one I took, I got long down here going into the opening range. So got lucky on this candle. And then the next one I took was this bounce just up to 544.19 because my stop was going to be if we were pushing back up above this gap. It was a little bit wider of a stop than I wanted, but if we didn't, I expected us to see this daily level again. I didn't expect it the same candle, but so again, got out there. And then my only other short trade was going into the end of the day. I hit him right here. There's plenty of other entries, but mine was here, mine was here, and mine was here. Those were the ones that I went looking for. The hourly 20 works with everything. There's somebody, I wonder if he's in here. I think his name's Tim, but he's been using it like the hourly 20, but on the hourly chart with TTM squeeze. It's pretty sweet little combo. I don't use the TTM squeeze, but it's sweet. Yeah, multi-time frame script on my tab. Oh, sorry, we're running a little. Give me 1 second. Got to make a post. See, we got a few more people in here. Mooney, great question. So honestly, how I trade, if I'm using day trades, I always use the candles to tell me if I should stay in a trade. So say you're short here. I mean, I was really looking for a scalp to this was data, this was the data candle. So when I entered short here, I knew, well, I assumed, and I was wrong in the end, but I assumed with this data candle and with the low of the gap right here, I assumed we were going to get a bounce. Everybody should have assumed that we were going to get a bounce there. But we didn't, we sliced through it. It was one of those days where, what should happen absolutely did not happen. And so we sliced through it. But if you're in it and you're in it for a day trade and you haven't planned it as a scalp, and you should never go looking for a $9 down day. but use the candles. If you enter here, you get the breakdown candle, bump it above, bump it above your entry. Then as we get another breakdown candle, move it to the top of this candle. As we keep breaking down, just use the tops of those candles, because generally when you start to break the highs of previous candles, that's when you can start to look for a reversal, which we did in super dramatic fashion here. And so anybody who was trailing their stops down, ultimately would have ended up getting stopped out right around here after catching it like just a parabolic move down, $6 or $5 or whatever. So use the candles and, let those candles close and figure out where they are. And obviously, be trimming along the way, but use the candles. And then anybody who is short and held through just a $4 single, $3, $4 single candle bounce against them, and then sure, they made more money, but that was not like the move. You needed to have your stop somewhere closer, because when a candle goes from 542 to basically 546 in one candle, that will absolutely demolish your gains. So, you should just use the candles to trail your stops down, look for a reentry. Yeah, and Mooney, no sweat on thinking we were going to bounce there. You should have. And you should always kind of assume when we're coming to these major levels, coming to the bottom of a gap, we're having the first break of yesterday's lows. You should be looking for a bounce. I'm not saying a bounce to trade or anything, not by calls, but you should be looking for the market to do a little bit of a retrace at least, and this was one of those days where that next candle opened, it was green for about half a second and sliced. So it was just one of those days, but you can't, even though they have been like wildly normal for the last month, you don't ever want to like plan on these gigantic moves. If you're getting a $2 or $3 move in your direction on SPY or QQQ or whatever, you should always take those gains and, then look for a reentry. Maybe you did see this big candle going up like I did. I happened to, I got lucky. I caught it. I wasn't planning on anything like that. And I was out like way before the top, of course. I was out probably fully right here. But so got a nice bounce. But when I saw that thing coming wicking down, wicking down, wicking down, I was like, oh, okay, I'll short the next bounce without a doubt, knowing worst case scenario, it's going to go a buck against me. Oh, we got Norvin in the house. Okay, well, so with that, we were just doing a little talking Sunday night scan. So, this is definitely a less official lecture. Questions encouraged. But with that, thank you for being here, Dirty River. Love doing these market scans with all of you. As I was saying when we started, we'll cover what I'm going to cover. We're going to talk about SPY, talk about QQQ, a couple things that I have, on my radar to watch this week, both short and long trades. Most of I don't like to trade short very often, but you just have to have a short play on tech in your mind right now, because they're there and they're doing very well, and tech is obviously not doing nearly as well as SPY. And not to say that SPY didn't have just a horrendous last week, of course, but in the world of the big sell-off that we just had, QQQ is pushing back down to those lows again, and SPY's not quite there yet. We can even see on this chart, we'll do another one, but we're just about back to the 50% retracement. So that's kind of where my line in the sand is right now on, that's where my line in the sand is for more short trades on SPY. I'll want to see us under there. But so we're going to talk SPY QQQ to start it off. And then I got Apple, Amazon, Meta, AT&T, Coca-Cola. Most of them, SPY and QQQ will take longer than the other. And then we should have, a nice solid 15 minutes, maybe, hopefully, for some of you guys' trades. And we'll check those out. And I see people already asking for things. Ask again at the end, because there's like a high probability I'll forget. And so when I bring it up, we can talk those. Okay, so with that, SPY, as always, I think you should always start on the daily time frame to get just an idea of where you're actually trading in the market. It's been super easy, it was easy enough to be short last week, but now we need to start looking at, with this big sell-off, we were watching on last week, a potential pull down to these SMAs. And then really that was, where I started. I don't like to trade short, but when we were going to break below these daily SMAs and stay below these daily SMAs on a heavy sell volume, you kind of got to look for a few shorts on something like that. But I always tell people start looking left on the chart. So something that's been working really, really well for us. So I've just been, sticking with it. There's no reason to, fix something that's not broken. So been running the fibs. These might not be exactly correct. They'll be pretty dang close though. But been running these fibs. For that retrace, we got almost 100% retrace. Obviously, not quite there. We were just fell just shy. I don't know, some cent shy of the all-time high, or at least an all-time high test, not necessarily a new one. And then ultimately started, doing some really nice selling for the all of last week. We had that short week going on last week, so a lot of selling. So that brings us to where are we on SPY? What should we be looking for? And so you have to look left and say, where has the market reacted before? Where are some places of interest that I might have? And the ones that I've really been trading around and was even, taking some trades yesterday off of these levels, or Friday rather, is this old gap. And I'm not concerned with it being a gap. Obviously, it's been filled, though we did kind of gap over it and gap into it. It has been filled, technically speaking, but I still always like to take note of those just because we saw multiple bounces here later. When we did finally break it on that day, we really flew above it. When we broke below it, we tried to push right back up to this previous gap low. And, it didn't cause the $20 sell, but that area resulted in a $20 sale, so we want to take note of those kinds of things. And so for me, those were the main things that I was looking for potential bounce areas, and then where would I continue to feel short. And then the only final one that I wanted people to take note of, and it's not a time frame that people look at a lot, but we wicked this 20 SMA. It was 539.33, and we hit 539.44. So we were right there. I just want people to be aware that that is where the weekly SMA lands, and those can be a very, very big level. And you're noticing it's lining up with the same pocket that we're talking about as strong support. So when I start looking at SPY, I got the levels that I'm, more interested in. That's when I can start to build a plan for this week. And so ultimately, if we sell below this 540, I do believe that we will likely come down, touch this 537, 538 area. We do have the 539.61, which is kind of the low of this gap. Obviously, don't worry about it being a gap, but just where the levels came from. So we got the 539.61. So that could even be your slightly better confirmation than 540. But a break below there, and I would start to really, really ease off here around this 537 area. And that's really where I would start to look to maybe play some bounce trades. We will, of course, need the market to cooperate. Well, XLE, XLF both showing a lot of weakness, especially that energy sector. Oil is just really getting smoked right now. Not saying we want that oil price to go up or anything, but you'll want to see some buying going on in the market if you're looking to play that bounce. But for me, that's where I will start to have interest, and that's where I'll actually really start looking for us to, maybe get a little bounce in this market. I'll feel the same if we're able to hold above 540, even if it's some, gap downs, break above, gap up, sell back down to it. I'll start to have a little bit more confidence that 540 might be the, where I want to look for the bounce. Otherwise, it's going to be that 537 area. And then if we get below there, that's when we can start looking to short down to some of these lower levels, your 535, 533.27. So we are coming to a point where the market could bounce. However, you're fighting big weakness. I mean, we've sold $25 in a week. So, there is selling pressure in the market right now. So you'll want to have your eyes on your things like, your VIX, your ADD, your longer time frame ADDs, of course, to see, are we starting to see some ticking up in the market? Because as long as we are not seeing any sort of tick up in the market, then you likely don't want to be the first one in the trade trying to catch the bounce. And so that's my feelings on SPY. Going to kind of keep it a little bit short and sweet. I like where we're trading. I think we have some really good opportunities. Again, if we bounce this 537, I'd love a bounce all the way up to the 545 eventually. If we break below there, I'd love to, get this dip all the way down here, 531, 533 zone. So I'm pretty impartial on the market, which way it goes. You guys all know that I do prefer to trade long, but when the market wants us to be short, you can't really fight it. So long and short opportunity, or long and short opportunities, kind of both ways on SPY this week. We got some data, we got CPI, the PPI, some Apple event, all kinds of things going on. So hopefully we have some, continued volatility. This last, I mean, since the middle of July until, basically I loved the week and a half of sideways, but since basically the middle of July, this market has been fun. So let's keep the volatility rolling. Okay, so no questions there. We'll hit QQQ now. We got Norvin talking AVGO. Yep, we'll talk AVGO. Yep. Oh, Mooney, I see your question too. Yeah, we can kind of talk that, but you aren't gonna like my answer. But remind me, ask me at the end of this. So QQQ, as I was saying, we'll do the same thing. You want to pull these fibs on here. However, we're kind of getting to an interesting point with these fibs because, we saw with SPY, we had retraced, I mean, almost, like I said, within 50 cents or whatever, we had retraced within 50 cents of those all-time highs. QQQ, not so much. I mean, it was still over $25 off all-time highs. So we knew that things weren't as good for tech, or I guess let's see, 20 bucks over all-time highs. We knew things weren't looking as good in tech. There's been a lot of people who were still rushing into that tech trade, even though it was the one to start the selling. Its bounce was definitely weaker, and its sideways movement was much less sideways than SPY. It was much more selling. So that's why we've been, trying to be very, very careful on our longs on the tech trade. Really, the only one I liked last week was Amazon, which it made a nice bounce and then also sold just heavy with everything else. So with QQQ right now, we are giving back most of the move, and so the next area that we have to watch is, at least in my opinion, this big zone right here. And we of course want to have our eyes on the highs of it, somewhere right around your 449, your 450, something like that. And then your lows of it somewhere down here, 434, 433 area. This is the next zone that we really want to watch on QQQ. Obviously, we spent very little time there the last time we traveled through it. So this is my zone of interest on QQQ. Staying below 450, keep us below that 450 level. And my main target is going to be this 200-day. This will be moving up, and this is the 200-day SMA for anybody who doesn't know. And the 23.6 fib. So we will have, not bounced most of it, and then we will have almost retraced the entire retrace back down. So that's where I'll start to maybe have some interest in QQQ, but this is going to be much more of a, it should bounce here. Buyers should show up and, at least attempt to hold us above it, as they, that's how the daily 200 works. I've demonstrated it a lot. Generally when you get close to it, the market is getting at least ready to have some buyers show up. You'll get close to it and you'll take a bounce, or if you break below it and you really hold below it, you are likely to see some big selling, as we saw in 2022. Otherwise, it's not common to spend large amounts of time below it unless you have bad things going on, like COVID. Those types of things will pull you below it. Obviously 2022 will pull you below it, but it is a place where you really should not be looking short. And we're probably going to see a lot of short chasing if we do get down to that level. Maybe we'll get a wick below it, but that 442 area, there's no reason to be looking short until we're really starting to see some strong selling below there. So that's where I would like to look for a bounce on QQQ. I'm not ready to look for a bounce on QQQ yet, tech, whatever, because, if we hold 450, there will of course be some intraday day trades trying to get long, trading it to the upside. But I still think ultimately upside moves on tech should be sold until we can get another visit down to this 200-day. So that's kind of how I'm looking at it right now. You can look to be short on the hold below 450, 449, ultimately targeting close to here. We know that we are going to have some random resistances and supports throughout this long consolidation that it did, but ultimately that should be your goal, even a little above it, because you don't want to be the last one left in the short trade if the market does decide to bounce. So That's tech. Again, gonna kind of keep it short on these. I think it's pretty simple. It's pretty cut and dry, the levels that we have in the market. That's how I'll be trading it tomorrow. I'll be using 450 as the line in the sand on QQQ. And then really on SPY, when we open tomorrow, the first thing that I'm going to do and really try to take note of is I'm going to go to the weekly and I'm going to figure out where this 20 is. And that 20, the weekly 20 SMA, is going to be my real line in the sand. I know that we have, all of these levels, these 537s, up to 539 areas. I want to see where this is going to stay, where this SMA lands. And that's what I will trade around. So I won't know until tomorrow the exact level that I'm looking for. But no reason to be predicting on any huge bounces or huge dumps. I know the market has been making like $5 plus moves every single day, but no reason to go looking for those super dramatic moves. It's been very, very giving intraday. So, no reason to be risking swings, no reason to be the first person in for the bounce or the first person in for the short. Just let the market kind of work out for you. Okay, so with that, any questions on QQQ or SPY? Nope, we're good to go. Okay, up first, Apple. I like the Apple trade right now. Apple has an event this week. Apple is obviously notorious for sell the news, so we'll see if that happens. And then technically, we're kind of sitting in a really good area too. If we do get selling, we can kind of start to go, we can go back to visit some of these previous lows that we had seen, back here a couple of months ago. So I think, and I mean, obviously here, but we just kind of ripped through them. But I think that Apple event could end up making it really, really fun to trade this week. It could hopefully be a nice volatile week for Apple. I like to trade it. So really, this 218 to or 219 to 220 30 area is going to be the zone that I'm trading around. If we get below there, obviously this 217 wick from a couple of days ago, you'll have to watch that. But if we get below about that 219 220 area, I'm definitely going to be looking for a move back to 215. That's a place where I'll definitely pull way back on the shorts because there's no reason to chase too big of a move on Apple. $5 drop is all you could ever need. But I would love that short trade on Apple. Then on the upside, we have what we kind of had our eyes on last week. That 20 SMA tried to cross below the 50, but ultimately by the end of the week stayed above it. So if they do decide to buy the news on Apple, if I'm not gonna, if we get another whatever their last event that thing was that sent it on like a $40 run. Not saying that happens from an iPhone event, but if for the first time in a decade they do some innovation or something and we get to running, then we can start to look for some of these highs on the upside. My trigger will really be above these SMAs. I would like to see us above both of the SMAs, even potentially over 225. I know that leaves a big area of no trading, but that's where I like to trade. I like to have some confirmation for the reasons I'm in the trade. And so really where it's at right now, I don't love anything, but a little bit of selling and I'll like to be short, a little bit of buying and I'll like to be long. So that's why I want to talk Apple. Again, I always like cut and dry trades, the ones they make easy on us. Of course, can you try to be long playing bounces up to the SMAs? Sure. Can you short bounces up to the SMAs for downside back to about 220? Sure. But I just like to trade around these really major areas. It removes a lot of the stress of trades. If I'm trying to catch a bounce at 220 and we start selling below 220, I stop out, no big deal. If I'm trying to short this SMA and we start buying above both of the SMAs, I stop out, no big deal. They give you very cut and dry entries and stop outs, and those are the types of trades that I like to take. The ones that are just easy, easy on your mind. They aren't stressful. The risk before you get in, the potential reward before you get in. So all you have to do is just sit and wait. And I think Apple, with kind of a news-filled week and an Apple event week, is one that everybody should likely have their eyes on. I think that it could provide some pretty nice opportunity. Okay, any questions on Apple? Okay, love it. Taking a drink of water. Up next, we got Amazon. So last week, going into the beginning of the week, I was definitely having some bullish feelings on Amazon, saying buy the dip down to the 200 on Amazon. Well, it worked. and then it got absolutely just clobbered like the rest of the market. And so for me right now, we have some pretty defined levels to trade on Amazon here. This low lines up perfectly with this previous gap, but we're below the 200 day. So, and tech is not what we would really want to define as strong right now. And so for me, Amazon, after being bullish, and there were a couple nice 5, 6 buck bounces last week, kind of have to start flipping a little bit more bearish as long as we stay below this 200 day. You guys know with basically all of my trades, I like to have a line in the sand that tells me where I trade. And so when we're trading around a 200-day SMA, that should be every single person's line in the sand. So I think we have a few opportunities here, a few different trades that we can potentially take on Amazon. The first one is going to be a bounce up to that 173, looking to short it. If you want the tighter stop, you're really just going to be looking for, maybe a 30-minute close over that 173. If you want the looser stop, it's going to be a daily close over the 174.40. It's going to be about $1.40 of risk, but you're going to be looking for, basically a $253 downside. So the risk reward is there to short the bounce up to the 200. And then if, we do end up looking like we're going to close above it, we just kind of go hands off on trades right there. The only other trade that I would look for on Amazon would be some sort of break and hold of the 170 to 170 area. The issue with that is the big bounce that we took here. So really the short trade that I like is that one. Is there a little meat left on the bones for the downside break below 170.70? Sure, but I would personally start to look for the bounce at 168.80 area. Look for some, double bottom, triple bottom, whatever you want to call it. But that's where I would be looking for the bounce. I don't love a long trade, even on a break and hold of these, just due to the weakness in tech. I would have a lot more interest in a bounce down here, looking for the move back up to that 200 day. The reason that I would rather play the bounce than the break above is just the overall market weakness. There's no denying. I mean, Amazon's down almost 30 bucks off all-time highs, right? About 30 bucks off all-time highs, actually. So, it's not looking awesome. So I'm not rushing into the long trades on something like this. If we really start pushing upside, then maybe we can catch an upside move, maybe a break at the little micro trend up here. But really for now, my only interest in playing the bounce is going to be down here about this 169 area, with stops just below it, risk it down to about 168. And if you're seeing any selling below there, then you just want to cut the trade. But that's where I'd look to play the bounce. But my really preferred trade on Amazon will be some buying up to that 173, even maybe a small break above it to look to short that for a move back down to this low. So Amazon, again, another one in a really, really awesome, easy to trade setup for us right now. So I like that. I like that one. It's Amazon has kind of been my top watch as far as tech for the last few weeks, and it's been putting in really nice moves for Amazon. And so it's still sitting there at the top of the list. It's been a fun one to trade, definitely worth having your eyes on. So any questions? Oh, we got Norvin going. Yep, we got Norvin going. Oh, no, yeah. See, 440 is just throwing out random numbers, ignoring big things. I wonder if he said looks like a V shape for SPY. That'd be funny because I said don't make predictions like that. And we got Costco and AVGO. Yep, you asked me AVGO. Andrew asked me AVGO, so I'm gonna do it for Andrew. Okay, next one we're talking Meta. So Meta right now, pretty tradable. Obviously, putting in really big moves. You didn't, last week wasn't necessarily the week to be looking to catch bounces on it, though it did provide some pretty nice bounces, no doubt. Trend is obviously down, setting kind of, a lot of you guys know that I like to trade, I call them a 3-push wedge. It's kind of an Al Brooks thing, but any sort of just 3-leg moves in the market are frequently ones to look that could be worth shorting, or on the downside worth longing. You can give them a stab at those places, and they provide a nice low risk trade, if it goes against you, and they give you, again, easy targets to look for. But so on Meta right now, big selling on it, obviously big selling across the market, heading into a dividend on it. And sold us to, like, a very, very important, not only psychological but technical level. You'll hear people, frequently discuss psychological levels, and they're there, and you do frequently get reactions at them, but they aren't backed up by technicals. Well, I love when you have a big psychological and a big technical level, because that tends to be where you can get your really big, like, nice parabolic moves off of. So 500 is that level. You can see we've taken many, many rejections at it. When we break above it, we tend to see some nice buying, at least for a little bit. When we break below it, we tend to see some very nice selling. Again, coming back here, some rejections, breaks above, some consolidation with a big push above, $25 push up, selling where they ultimately wanted to buy it back above it and do a $40 push up, So we know 500 is not only psychological, but it is definitely technical as well. So Meta is one that is in, I don't like trading it when it's up in these kind of no man landy areas like a lot of people do. I like to sit and wait for the trade to come to something like this where we have the easiest line in the sand ever. If they're going to get to selling below this 500, you're holding us below 568, holding us below 500. That's where you look to get short. You obviously want to keep your stops relatively tight in the beginning of the trade in case they do try to give you a nice bounce above it. But if we're staying below 500, then the obvious target is going to be these lows, this next major place of consolidations or breakdowns or breakouts. So the 491 is the obvious target. If you want the really tight stop, you're going to be looking for, an hourly close or whatever above 500, 501. So you have a couple of bucks of risk on the trade for about $9 a downside, $8 a downside. Love that trade. Love the trade short if it presents itself. Obviously, you'll want to watch what will now be last week's low of the week as your first target. If you're short and below 500, you really want to be careful as we get to the low of last week. If we get below there, the selling should definitely increase and you should see a pretty nice quick move down. Obviously, keep trimming your positions, pay attention to, use your EMAs, use your SMAs, go look for some of these previous wicks as some targets. But stay below 500. Ultimate target's going to be that 491. And then again, if we get below 491, sort of the same deal. We could really get to flushing. 482 would be, 490 again, psychological number, but major daily level, major area of support, major area of bounces and breakouts previously, as recent as a few weeks ago. So next area to look for. But when you're taking these trades and you get a nice move down to your next level, you obviously want to be exiting most of the position there and looking for some breaks and retests to continue being short. On the upside, however, because Meta's putting in moves both ways lately, so it's worth it to always have the upside. It is the exact same levels that we cared about before. I would really not just buy it on the break above 500. I would wait for this break over basically 501 area and then use any strong selling under 500, 499 as my stop out. So again, a couple of bucks risk. First, going to be looking for the daily 50 SMA. 405 area is where it will be tomorrow. So looking for that daily 50 SMA, and then ultimately bounce up to this trend, maybe 510. So you're going to have about $2 of risk for first target 4, and then second target 2 risk 5 reward. So really nice, nice move either way, up or down. So I normally wouldn't talk Meta. I don't like trading it. Its contracts have a wide spread and relatively low liquidity. So definitely not one of my favorite things to trade. And it is an interesting one. People ask, about contracts on this and whatever. And so when you're trading something like Meta that does move $5, $6, $7, most of in my opinion, you should be trading right at the money. If you can afford it. If you can't afford it, then you should likely stay out of the trade. Meta is something where you pretty can comfortably go, $5, $7.50, whatever it is, out of the money, and still get a very nice move just because of how it trades. But I still don't recommend buying those, $10, $20 out the money contracts or anything like that. Keep them reasonable, and you'll see that you make more dollars a little bit easier than those out of money contracts. Oh yeah, yeah. I know a lot of people were in those 500s. I actually see that. Norbin sold the top. Nice. Okay, and so let's see. Yep. Oh, we're already getting questions. We'll do questions next. First one we're gonna talk Coca-Cola. I've loved actually seeing people trade it recently. And so Coca-Cola holding at the exact level we would have wanted it to hold. I'm wondering if it's going to be, I ended up missing that, right off the open entry that I was looking for last week, but in a really, really nice place to trade, cut and dry place to trade. I'm a dip buyer all the way down to 70.9 or so. And then I have a tight stop. And below there, I'm looking for a move to this 20. So I'm going to be risking about 10 cents on the long bounce off of here. And then on the short trade, it's going to be the exact opposite. I'm going to be stopping out over 71 and looking for that move down about 80, 90 cents. So it's at a point of just excellent risk reward. And if you trade something like Coca-Cola, trade those at the money contracts. A 90-cent move, a dollar move on Coca-Cola, if you can catch it in a day, those contracts pay gigantic. So we are at a really, really awesome place to trade Coca-Cola. It was a hard one. I wanted to trade it for, basically the last week and a half. But when you're trading at levels like that, every day feels like a chase. And I mean, looking back, you can of course see like, oh, I could have bought Coca-Cola calls every day until, Wednesday and Thursday of last week, where if you bought calls, you got clobbered. So Coca-Cola has now sold itself back to a point where I'll feel a lot more comfortable trading it. And then again, if you don't want to trade short on it, because obviously it's super strong, and you guys all know I recommend not jumping in front of that kind of a train. But if you only want to trade it long, look for this dip down here to this daily 20, 70. It'll be about 70, 25, something like that tomorrow. With stops below 70, 17, if you even want to widen it out down to 70, but another really, really great bounce point. So I think the market, providing after all that selling last week, it's feeling a little bit better to look for some bounce trades on some of these names. Obviously, most of the selling was in tech. Like if you look at like the Dow was setting all-time highs last week, while the others were not. So, there was some buying going on in the market until we finally saw that selling show up. But I think with the selling, a lot of these names in the market have finally sold themselves down to a point where maybe we can look for a couple of bounces. Okay, so let's see. Oh, nope, I got one more. So Coca-Cola, nice cut and dry one. AT&T, of course, another real cut and dry one. Simple trade. I have one level that I care about, and it's 21. If we are above 21, then I'll be looking for the move to 21.42. And if you're curious where I got that, it's from back here. These previous highs that we had back here, is even a big wick off of here. And so this is the target. If we're above 21, these highs are the target with a tight stop below it. Well, if we start to get to selling, which in my personal opinion, this is more the trade that I am looking for. I'll be looking to be short under really the first test of 21 with some relatively tight stops above it, because I love seeing AT&T rally. You guys know I love to trade AT&T, and I love to see it going up. They're getting bad news right now and just rallying on bad news. So I'm just waiting for one of these days, sooner than later. We'll get a nice sell day on AT&T. I think they have like 17,000 of their workers on strike right now. So it's I'm more hesitant to chase the long up here than I was on like the breaks of 20 or those original breaks of 19, where I was saying, buy all dips to 19. So I'm a little bit I'm a little bit hesitant to chase the longs up here, and I feel a little bit more comfortable on a short down to 2079. And then ultimately 2050. In no way am I bearish on AT&T, but I think it needs some retrace just off some of the news that it's got lately. So I would love to see a pullback to about this 2050, which is again where I would likely be looking to maybe try to catch the bounce, 2050, 2060 area, try to catch the bounce down in there. But if the trade is a break and retest to 21, I'll be in there, no questions asked. And then anybody curious on contract selection, no matter what, it will be 21 puts or it will be 21 calls. I want to be in the money for any of these sort of moves on something like AT&T. Well, I'm sorry to hear that, but it's also hilarious because yeah, you are not the first person to tell me that they're horrible to work for. Yeah, and that's the thing, don't use their phone service, but trade their stock. It's sure fun to trade. Okay, and so with that, we are right about where I wanted to be. 15 minutes left. Let's look at some stocks from all of you. I know that I had some up higher, so I'm going to try to locate those and try to start with those. Well, I know one of them was AVGO from Andrew, so we're going to start on AVGO. So I know Norvin's all over this one. I think he was a bit early on his dip buy on it, but I do think that they had some great earnings and they sold. I need to read a little deeper. I didn't. Tilio's really into this company, so I normally just take his word for it. And I haven't actually asked him about it yet. But I think that we are getting closer and closer to the potential dip buy on this thing. We're of course seeing selling all over tech. We're likely seeing even still some post split selling. A lot of people like to sell after the split, so it makes sense. We obviously took a big bounce with as the rest of the market took a big old bounce, but the place where I would have interest in really trying to dip buy on this is this 134 area. But if the selling pressure continues, I would imagine we get a break below the 200 day, at least just a little poke below it. But I wouldn't expect it to break, especially on the back of what I saw was pretty dang decent earnings. I mean, yeah, they blew out EPS, and so I mean, they did well. They apparently just weren't doing something well enough. Like I said, I haven't read the report on it yet, but I think down there about that 134 area would really be the place to start buying the dip. Maybe if we get below that 136, you could start to try to get in early, but that's where I'd be looking to, maybe buy the dip on this. However, I'm not ready to short it. There could be some more potential downside. I mean, we could retrace all the way to these, 120 lows, but it's hard when fundamentally speaking, they aren't, you know, there's no reason to be under the 200 day. The 200 day is telling us that, basically everybody that's bought shares in like the last year on average is now underwater on it. And so you want to be careful any sort of short down here. But as I always try to teach, don't be the first person in the long trade. You want to let some other people decide they want to buy it before you want to buy it, at least in my opinion. But that's what I'm looking for on AVGO. It's not one I trade a lot. Uh, it's not one that I trade a lot. So, you know, take my opinion with a grain of salt, but it's just risky to be trying to be the first one in that tech buy trade right now, even with, a company that is fundamentally doing well. So you have the potential for a bounce here, but still sell any sort of move up. Okay, so we got AVGO, then we got Norvin. We got Norvin. Oh yeah, that question about Theta on SPX and SPY. Yep. Norvin's in AVGO. Nice. Oh, Norvin wants Costco. Let's check it out. Why not? What's cost up to? Sometimes, yeah, that's kind of what I was thinking. Hey, uh, this is a better one, Norvin. I mean, I don't trade Costco because those contracts are so dang expensive. Hmm. Costco looking pretty nice. Definitely held up halfway decent through that selling last week too. I mean, I think you got a couple opportunities on Costco right here. These dips down to 874. I think you unfortunately would need to have a relatively wide stop selling below 870, but looking for that move back up $6 or so, that's a nice little, it's not quite a 2-to-1 risk reward, but a $6 move in your direction is plenty on something like this. And then if we start to see some daily closes above that daily 20, 880 area, you can look to place some more bounce 888, 895-ish area, try to reclaim up to some of these highs. Obviously, you always want to be cautious into anything that looks remotely like a double top. You want to be careful there. But nice little dip buy opportunity on Costco the last couple of days. Obviously, the buyers have wanted to show up around 870. So that's why if you are buying any of these moves down towards it, that's where you want to have your stop. Obviously, previous highs as well from back in June. But I don't hate this one. I don't hate this one, Norvin. We'll take it. Yeah, I mean, I like this trade. Those contracts are unfortunately just prohibitively expensive, but on something that's trading at 800 bucks, that's when you can start to more safely go, you know, 10, $15 out of the money and still catch a nice enough move. Just make sure there's some volume and some OI in there, you know, nothing worse than getting in a 300 OI contract and not being able to sell it. PLTR. Oh God, I mean, things in the S&P, I guess. What did it what's it at? It's at 32. Let's check it out. I gotta believe that this thing's gonna see a day of selling here pretty soon. Let's see. So it's pushed all the way up here to 32. I mean, you know, it's in the S&P. It'll definitely have some more focus now. More funds will be willing to trade it. That's for sure. I mean, honestly, that wasn't a hard. I think we talked about this one. Did you guys ask me about this? The only one I got in there is MMA. Oh, this was probably you, Al Brooks, asking me about this last week, huh? I probably said buy the dip down here. And you probably said buy the dip down there. But who knows? I mean, I'm not getting long at 32 with 33 right overhead, I'll tell you that much. But the thing that you'll want to be cautious of is when we do start pushing all these highs over here, don't just expect this thing to fly to the moon. Expect this thing to really see some selling on the back of a bunch of people that are finally able to get out after a really, really long trade. AMD. Everybody loves to hate this thing, huh? I wonder, this is probably my last chart. It's still just looking horrible. I mean, this thing can't sustain a bid to save its life. I do think that for the first time in quite a while, that news of them taking the like major AI person from NVIDIA is pretty good. I think that lawsuit, if it pans out into anything against NVIDIA, I gotta believe that's pretty good. I'm sure there's some people watching this trend. I just can't be long on this thing. It can't sustain a bid, you know? Not to say that there's not some technical bounces, you know, it's had some nice moves up, but thing is hurting. I'm sure some people are trying to dip buy off 130, which I get it. Technically speaking, you could probably get a nice little bounce off of there, but I'm not like adding shares or nothing personally. Just like you have all the SMAs below the 200 day now. I mean, when you got the 50 and the 20 below the 200 day in that bearish setup, I mean, that's not like technically speaking good for the stock. And you just can't be long on this thing anywhere near that 20 SMA. But you could try to catch a bounce here, but I sure ain't catching a bounce on that thing. I'll tell you what. Tesla. Classic Tesla. So as I've been preaching, just, you know, for who knows how long, you just can't be long Tesla here. Wow, look at that just rejection off the weekly 200. You just can't really be long Tesla like for anything more than a trade for years now. You know, of course it's put in some nice moves up, but as I've been preaching, I mean, I was preaching for the last couple of weeks, do not be long anywhere near 220 because that was lining up with the trend. Well, now as the trend keeps going down, that weekly keys closed ugly. Daily is closed ugly. Now really about 218, 217. You don't want to be long there with that trend. That's where you want to be looking to get short. Of course, you know, you could get some insane blowout because Tesla had that just 2 days of ripping to give it all back, you know. Had 2 days of ripping above that trend, but you know, led the way down on selling. So, you know, you just watch this trend. It's a little off on the daily chart, but you just watch this trend. You can try to play long above it, but I'm not. You know, I think you look to stay short there. And then if anything, you buy those dips at 200 trying to catch a technical bounce. Oh, Ramsey, we'll catch you later. That was a while ago. Yeah, I said earlier, Apple sell the news, and you know, it is because I think it's just that lack of innovation, I mean, they put a few new cameras on there. They do, they do that kind of stuff. Whatever this event was that just sent them on the run of a lifetime, that was an oddity. But they just haven't done anything to really wow people. This is an interesting one with the heavy sell in it, or into it. I mean, we're down what, $15 or something going into the event. So generally these events have been by the news, like in, or buy the way into the news and then sell that news, but go buying into it for sure. And so this is one of the first events, at least if memory serves me, I haven't gone back and looked to verify this, but one of the first events where I've actually seen a sell into it. And so that was why when I talked about it earlier, you should have eyes up and down on Apple right now. I mean, even if nothing else, it's doing, compared to what tech as a whole is doing, it's down 8%, or no, I mean, I guess it's down 7%. So it's no denying it's down bad, but it's faring better than a lot of the tech names are. So always keep something like that in mind, and have both of these trades in your head just in case. Cam, did I go over KO yet? Well, it depends what time you got here, and I know I'm running behind on that. But yes, I did. But KO, we can check it out again just to show you. I got a simple line in the sand right here, 70.9. If we're above 71, 70.9, I'm looking to play this bounce up, and I'll be targeting these like wick lows on the way up. Those are the only levels we can use. So I'll be targeting some of these wick lows on the way up. And then below there, I think a short down to this SMA could pay really, really nice. So nice cut and dry trade for us. Tesla, we did it. Norberto, there we go. Yeah, that was you who asked. I hope you added where I told you to ask there, Al Brooks on PLTR. I know MMA finally got PLTR in the S&P. I can't even believe it. Really adding meaning to the pores side of it. Yeah, AMD is just looking bad. I mean, and I still don't like want to short it just with down, I mean, the thing is smoked, but let's be real here, it's probably going to break down and visit these lows. The thing just cannot sustain a bid. Look at SMCI. Yeah, why not? We're almost back to the infamous levels, Norvin. Do you see that? That was the day it all happened where I told you I wouldn't long it at 311, and then you sold it at 306, and then it ran to like 400 the next day or something. What's the date? 9/8. We'll check this one out. Uh, Clobbered. Well, I mean, let's be real here. It pretty much has to go visit those 360s if it keeps closing at lows. And then for like the very first time, I sure like almost like that dip buy. I mean, it is worth attempting some calls off 360. Who asked this? Andrew. Nice eye. Wow. I mean, it is worth it. Let me get that a little bit more accurate for us. I mean, it is worth a stab at 360. Run the wide stop. It's SMCI. You need the $5 wide stop, as much as I hate to say that. If you want to keep it tight, you could do $3, 357, but that long at 360 could pay really, really nice. I mean, that could give you that nice bounce up to this weekly close, that 382 area. So, I mean, obviously you want to be trimming along the way, but that could pay really, really nice if you had it. There's no way when is the SMCI split? That would be the run of a lifetime if it went back to that before the split. But man, that 360, nice eye again on that one. I'm gonna put even Duns, I think even worth a little bit of an alert. I've never traded this one. I actually missed it. I wanted to trade it a while back, and I missed a really nice short on it. Wow, not looking so good, huh? Man, there's not a lot in the way for this thing. I mean, just slicing weekly SMAs, that's never a ideal situation, I'll tell you that much. You could take the stab at 30, but I wouldn't. I'd feel more comfortable down here at 26.63, but I mean, this is some ugly selling. I mean, you would hope that it would bounce where you wanted it to here for it to at least go retry that weekly 200, but that's ugly. You could try the 30 bounce though, but I would be much more inclined down there. That's just a tough one. Wow. I mean, it is clobbered, huh? That looks important. Yeah. I mean, you could try that 30 bounce up to 32 if you, I mean, if you get the touch of 30, you know. But really, if we break 30, you could almost short it down here to this 26.62. That could be a nice one. XOM, finally, after months. I mean, so I got to be honest, you know, but finally after months. So this has been, you know, free money since June, long the 114, short the 118, 119 when everybody's chasing that breakout, you know, and just don't trade it in here, you know. And for the first time we took that breakdown. However, I'm getting curious, you know, because and they don't always track perfect, but I'm getting curious with this hold over here of these oil prices, the 67 a barrel. I'm getting I wouldn't be shorting oil here, which, you know, with XOM, you know, it's of course not just the oil price moving it, but I definitely would still, and this one, you know, paid nice, of course, can't deny that at all. I wouldn't be short down here. I mean, I maybe would have entered short on the break of this like 113 or something, you know, looking for the 112 about where it bounced. But I would almost be looking for a retrace back into this range and maybe try to see if you can get a move up on it. I don't trade oil that way, but if I was, that's what I would be looking for. Nvidia. Oh, Norvin's asking for Home Depot. So yeah, Nvidia. Actually, I'm happy you brought this one up. I charted this one. Very, very simple thing to trade right now. That 100 to 101 area, where this old gap was, obviously, technically speaking, filled, but that 100 to 101 area, that's where, I mean, you at least want to take a nibble on it. I do think if we start to see it, you will see very quick sells down to this 97. If we break that, obviously, kind of these lows, I wouldn't even say the full 90 down here, but kind of some of these lows over here. But if we don't get a bounce at 100, I would definitely expect a bounce around 97. Not saying get long on Nvidia, but that's where I would have interest in taking a stab at it. I know a lot of people, I liked it. You know, it was a halfway decent swing there going into Friday. And I think it even did take a little gap up on Friday. Oh, yeah, small one, small gap up. Oh, no, but by open, it was mostly gone. I like this type of a setup where we had reclaimed that really nice level and held it for the day, you know, after a push above it, a consolidations, you know, right at it. This was, I liked this for a swing trade. If I remember right, even some people took it, they said in my Thursday class. And so I like this for a swing trade. I wasn't in there. Unfortunately, it was one of those days where the market just got to selling. So if you weren't out on the first tick of the day, you were likely pretty deep red instantly, unfortunately. But I would have liked that. I did like that as a swing trade setup. However, now we're finding ourselves back down to some more, you know, some more confident places you could kind of try to take those bounce trades, even if you buy the 101 with stops under 100, whatever it is. You know, worth it to be at least looking for a potential technical bounce down here. Okay, well, if that's going to do it, I see a few of you trickling out. Thank you so much for being here. I love these Sunday classes. They're super fun. You guys know I love looking at charts. You always bring some really good ideas as well. So thank you all so much. Yeah, I did. And I'm just not, I wouldn't be long PLTR. I mean, obviously, if you caught that move up, you know, but this 32 is some big resistance, 33 is some big resistance. So you definitely want to be at least trimming into those. Obviously, if we can get above them, it could keep on going. But dips down to that 29-30 area could definitely be worth looking at. And I do think it'll finally start to have some more focus on now that it's in the S&P. Yeah, thank you everybody. Thank you all so much. Norvin, thank you all. Thank you. Thank you. Christina, yep. All the regulars are here. Thank you all so much for always coming. Jay, everybody, thank you. No, do I think you should sell your shares? I mean, it depends what you're in at. Depends if you were treating it as a trade. Depends if you're actually bullish on the company. All of those things are what matters. If we go back, here's MMA's entry on PLTR back here at 16 bucks. So at 32, or I mean, I assume he's still holding those shares. At 32, he's sitting up 100% on shares. There's no reason to trim them. Or I mean, you can trim them, but there's no reason to get out if you're bullish on the company. However, if you bought some shares looking for some, S&P inclusion move up, then I would probably be selling some of them off up there. Oh no, dude, six. Thank you so much, man. I appreciate all the questions. Man, woman, sorry, I don't know. But thank you. I love answering questions. There's never a dumb question, never an annoying question. That's what I'm here for. Okay, right on, everybody. Thank you so much. Have a great night, and we will see you all tomorrow.